In this free video course, you will learn everything you need to know about the MACD indicator for trading crypto, stocks, forex, or any other financial market. By the end of this course, you will not only be able to use the MACD as a pro, but you will also learn multiple different MACD settings that most traders don't know about. Alright guys, so welcome everyone to this MACD indicator trading course. And let's begin here by super quickly taking a look at what you can expect to learn from this course. The very first thing we're going to take a look at is, of course, what is the MACD? Or in other words, what is the moving average convergence divergence? It's a pretty complicated name, but don't worry, by the end of this course, you will be able to master the MACD indicator. In chapter 2, we're gonna dive deeper into how the MACD indicator actually works. Because in order to use the MACD in an effective manner, we of course need to understand exactly what the MACD indicator is telling us about the price. And since this will be such a long video, I will be able to dive much deeper compared to, for example, other videos here on YouTube. In chapter 3, we're going to take a look at the worst MACD mistakes you have to avoid. And these are mistakes that are both super common and they can also lead to devastating losses. So I highly recommend you guys to pay extra attention to this chapter. In chapter 4, it's time to talk about something super important. And that is MACD divergence. And using MACD divergence is definitely one of the best MACD trading strategies for beginners. So this is something you have to know about before you start using the MACD. Last, but definitely not least, we're gonna take a look at some advanced MACD settings. So how can we change the MACD settings to potentially improve the MACD indicator and as a result, improve our trading? And we will also take a look at some more advanced MACD trading strategies. So this course is meant to take you all the way from being a MACD beginner to being an advanced MACD trader. Alright, so now then, what is the MACD? The MACD is a moving average based indicator, and that we can actually hear on the name. MA right here stands for moving average. And what the MACD indicator does is that it combines three different moving averages to measure something called momentum. And in very simple terms, you can think about momentum as the speed and direction of price movements. So if you take a look at this chart right here, you can see that we have the MACD indicator here at the bottom and the price here at the top. And for now, I'm actually only showing you guys one part of the MACD indicator, and that is something we call histograms. You can see these sort of valleys and these sort of mountains right here is what we call MACD histograms. And as I said, this is just one part of the MACD indicator, and we will talk more about the whole MACD indicator very soon. But what I want to show you guys with this example right here is how momentum affects the price. So remember, momentum is both the speed and direction of the price. So when we take a look at this chart right here, we can, for example, see that we have a price movement with these three candles that shows a very sharp movement towards the upside. And when we see movements like this, you will also notice when we take a look at the MACD that we see sharp movements on the MACD indicator. And while we see lots of small candles, like for example right here and right here, you will notice that the MACD indicator will also show very sort of tiny and small movements. So now we have to dive a little bit deeper into how the MACD indicator and momentum is related. So once again, here on the top we have the price, on the bottom we have the MACD, and for now we are still only looking at the MACD histograms. But in order to use and understand the MACD indicator, one very important concept we need to understand is something called a momentum candle. And what is a momentum candle? Well, a momentum candle is a candlestick whose real body is at least twice the size of the previous candles. So if we have a candlestick right here that looks something like this, it can be either green or red. The white part of the candle here is the real body. So from this point to this point is the real body of the candle. And if this body is at least twice the size of the previous candles, so let's say that the previous candles look something like this, then we can define this candle right here as a momentum candle. So now guys, as a first exercise, I want you all to look at this price chart right here and see if you can identify any momentum candles. So feel free to pause the video right now and do the exercise. Well, did you find any momentum candles? Let's take a look here together. So in my opinion, the most obvious momentum candle is this strong red candle right here. We can see that the real body of the candle, so from this point to this point, is more than twice the size of this candle right here. And also, if we look at all of these small candles, we can see that it's, 4 times or even 5 times as large. So this right here is definitely a momentum candle. But what about this candle right here? Well, we can once again see that the body of this candle is actually more than twice the size of the previous candles. So this right here is yet another momentum candle. But what about, for example, this candle right here? Is this a momentum candle? Well, not really, right? If you take a look at the real body of this candle, we can see that it's not twice as large as this candle and not twice as large as this one and this one. So this green candle, I would not consider a momentum candle. But now you guys might of course wonder, why are momentum candles important when it comes to the MACD indicator in the first place? Well, momentum candles are important because they will affect the MACD indicator the most. So for example, if we take a look at the 2 momentum candles we recently identified, you can see that it is when we see these sort of momentum candles coming in, it is at this point the MACD indicator really starts to drop down. While during the part right here, where we pretty much see no momentum candles and the price is pretty much just going sideways, we can see that the MACD indicator is also extremely tiny. Another important thing to notice here is that even though after these momentum candles, you can see that the price continues to push down, you can actually see that the MACD indicator goes in the opposite direction. It goes slightly in the opposite direction. And to understand why this is the case, we need to dive a little bit deeper into how the MACD indicator actually works. Alright, so now let's take a look at how the MACD indicator works. And as you guys can see, now we have the full MACD indicator on the screen. And the MACD consists of 3 parts. First, we have the MACD line, which is this blue line right here. When you use the MACD in TradingView, the standard color for the MACD line will be blue. The next part of the indicator is the signal line. And the signal line is this orange line right here. And last but not least, we have the histograms. And as you guys already know, the histograms are the valleys and mountains here on the MACD indicator. But where does the MACD line, signal line, and histogram actually come from? Well, let's begin here by the MACD line. The MACD line is calculated by taking a short-term moving average minus a longer-term moving average. And the standard settings is to take an exponential moving average, or in other words, EMA, based on 12 periods, minus an exponential moving average based on 26 periods. And by the way guys, if you want to learn more about moving averages in general, I actually have a full 1-hour long course about moving averages. So I highly recommend to watch that video when you're done with this MACD course. But what about the orange line, the signal line? Well, the signal line is calculated by taking a simple moving average, or in other words, an SMA of the MACD line itself. So SMA 9 basically means simple moving average based on 9 periods. And because the signal line is a moving average of the MACD line, we will actually get a very important property. And that is, as long as the MACD line is above the signal line will go up. And as long as the MACD line is below the signal line, you can see that the signal line will go down. So that means that when the MACD line crosses the signal line from below, this is the point where the signal line starts to rise. And when the MACD line crosses the signal line from above, this is the point where the signal line starts to fall. And using these kind of crossovers like right here and right here is actually a pretty common MACD trading strategy. And we will of course talk about that later on in the course. But now then, what are the histograms? Well, the histograms are basically the distance between the MACD line and the signal line. So if you take a look at this part of the MACD right here, you can see that when the MACD line is below the signal line, the distance in between these two lines will create the histogram valley right here. But when the MACD line is above the signal line, like this whole part right here, you will see that a mountain will be created based on this distance. Same thing is true right here. Once again, we have the MACD line below the signal line and the distance creates this whole valley. But now there's one thing we still haven't talked about, and this can be a bit more complicated. What does it mean when the blue line crosses the line here in the middle, or in other words, what we call the zero line? So now let's dive deeper here and take a look at the MACD zero line. And this can be a little bit more advanced, so make sure to really pay attention now. But the first thing is pretty simple. The zero line is basically the line here in the middle, which separates the valleys and the mountains of the MACD indicator. But in order to understand what it means when the MACD crosses above or below this line, we need to open up a chart here. Alright guys, so now we are in TradingView. This is the site I use to find all the different price charts, and it's in TradingView I do all my technical analysis. And I know that most of you guys are already familiar with TradingView, but if you guys for some reason haven't got started with TradingView yet, I actually have a special link that you can use to try out TradingView Premium for 30 days for free. And if you after the 30-day trial decide that you want to upgrade, you will get a $15 bonus. So if you want to try out TradingView and at the same time supporting the channel, don't hesitate to use the link. It will be both in the description and the top comment of this video. But alright, so right now as we're speaking, I'm looking at Bitcoin on a daily time frame. So every candlestick on this chart represents 1 day. And the first thing I want to do here is that I want to open up the MACD indicator. So to do that, we go up here to the indicators tab in TradingView. And what we want to search for here is simply MACD. And you want to go down here and open up the indicator called moving average, convergence, divergence. And in order to show you guys how the zero line works, we actually need to change a few settings. So we go down to the settings tab of the MACD indicator. And for now, I actually want to uncheck the histograms. So I don't want to show you guys the histograms, and I want to uncheck the signal line as well. Then I want to go here to the MACD line and make it a bit thicker here so that you guys can see more clearly. And now we are ready to press OK here. So as you can see, now we have a MACD indicator with only the MACD line showing. And now actually to make the zero line a bit more clear here, I want to change the zero line to a straight line, and I want to make the opacity like this and make the zero line black so you can clearly see the zero line, and press OK. So now we have the MACD line and we have a clear zero line. And now let's remember here what the MACD line actually is. The MACD line is a 12 period EMA minus a 26 period EMA. So what we want to do now is that we want to open up two exponential moving averages. So we search for moving average exponential, we open up one, and we want to open up another one. And now we want to go up to the settings here. So we change the first EMA, we go to inputs here, and we change the length to 12. We can also change the style here to make it a bit more clear. Let's make it, for example, purple, and we can also make it a bit bigger. Okay, now we go to the second EMA, and remember the second EMA is 26. So we change it to 26 right here. We can also change the style to make it a bit more clear. Let's change it to orange and make it a bit bigger like this, and press OK. So now we have two EMAs on the chart, and we also have the MACD line here in the bottom. And remember, the MACD line is calculated based on these two moving averages. And when we have all this on the chart, we can finally understand what the zero line means. So what you will notice if you take a look at this point right here, you can see this is the point where the MACD line crosses the 0 line. And what happens at this exact point? Well, you can see that it is on this point, the purple line actually crosses the orange line, or in other words, it is at this point the EMA 12 crosses the EMA 26. So as long as the EMA 12 is above the EMA 26, you will see that the MACD line will be above the 0 line, right? So when the shorter moving average is above the longer moving average, the MACD line is above the 0 line. And the same thing is true for the opposite scenario. As you can see, when the EMA 12 crosses below the EMA 26, this is the exact point where the MACD line crosses below the signal line. And I think that by simply understanding this, you will probably have a better understanding than most traders how the MACD indicator actually works. Alright, so now when you have a good understanding of how the MACD indicator works, now you are ready to learn about one of the worst MACD mistakes. And remember from earlier in the course when I talked about that some traders uses the points where the MACD line crosses the signal line, like for example right here, as a buy signal, and the point where the MACD line crosses below the signal line, like right here, as a sell signal. Or another way to think about this is that every time we see a valley, this is a sell signal, and every time we see a mountain, this is a buy signal. And let's actually analyze this chart right here and see if this is a good idea. Well, if you take a look at the first cross, I hope you can see right here, you can see that after this cross appeared, the price completely collapsed here. So this was actually a good sell signal, right? But if we take a look at the next cross, when the MACD crosses from below, it's a buy signal. Let's go up here to the price. The buy signal occurred right here. Was this a good buy signal? Well, not really, right? Because after this signal, you can see that yes, we saw a tiny movement to the downside, but just shortly after, the price dipped even lower. And if you traded that move right there, you would have probably gotten stopped out and lost the trade. So this next point was not really a good trade. If we take a look at the next cross, you can see here we have a sell signal, right? So the sell signal appeared right here. And once again, this was not a good signal because just after this signal appeared, and if you went short on that move, you would have probably lost money. Let me delete some stuff on the chart so you can see a bit more clearly. We can take a look at the next buy signal. We have a buy signal right here. We go up to the price and you can see that after this signal appeared, once again, just after this signal, the price pushed down. And we can continue to look at this. You can see we have another sell signal right here. And this sell signal was once again a bad idea because the price started to push up and so on and so on. So out of all of these signals, most of these signals was false signals. We had one good signal coming in right here, and we had another good signal coming in right here. But most of these signals was bad trades. And this right here is basically one of the worst MACD mistakes. If you trade the MACD by only using the crossovers, it's actually often a bad strategy and it can accumulate large losses over time. And there are much better ways to use the MACD. And in the next chapter, we're going to talk about one of the best ways to use the MACD indicator. Alright guys, so now we are very soon ready to take a look at an amazing MACD trading strategy, which is MACD Divergence. But before we can look at all of these different divergence strategies, we first need to learn about the two different types of divergences. We need to learn about the difference between histogram divergence and MACD line divergence. So basically, as I said, there are two types of MACD divergence. First of all, we have the histogram divergence. And the histogram divergence typically provides faster signals, while the other type, the MACD line divergence, can generate more significant signals. So if you guys take a look at this chart right here, you can see that we have the price on the top and we have the divergence on the bottom. And we will talk more in depth about divergence very soon. But in very simple terms, a divergence is when we see the price going in one direction and the MACD going in the other direction. We have a total of 4 different types of divergences that we will talk about soon. But for now, what I want you guys to see here is that the MACD divergence starts here earlier compared to the line divergence. So when we talk about the MACD line divergence, we are looking at the difference between this high and this high compared to this high and this high. And when we talk about the MACD histogram divergence, we talk about the difference between this high and this high, this high and this high. And as I said, for now, all you need to notice here is that these divergences will not happen at the exactly same time. Many times the histogram divergence signal will appear sooner. It's actually possible here to use both divergence types at the same time, and this can actually provide even stronger signals. But alright then, so now let's take a look at the different types of divergences and how you can trade them. And let's begin here by taking a look at the bullish divergence. As you guys can see here on the top, we have the price. So the bottom line here is the price and the lower line here is the oscillator, which in our case is the MACD. And the reason it says oscillator right here is because divergence principles can be applied to other indicators as well. For example, the RSI indicator. And guys, I actually have a full 1 hour long course on the RSI indicator. So if you guys have the time, I highly recommend to watch that video after you have seen this one. But now let's take a look at the bullish divergence here. What we are looking out for when we're looking out for a bullish divergence is, first of all, we want to see the price printing lower lows. So for example, here we have one low and then a lower low. And at the same time, we want to see the MACD printing higher lows. And one thing that is very important, especially for beginners here, is that when we are talking about bullish divergence in general, we are always looking at the lows. So for example, we look at the low right here, we look at the low right here, low and low. It's important to not confuse the lows with the highs. When you are looking for bullish divergence, both the bullish divergence and also the hidden bullish divergence down here, you're always focusing on the lows. So if this sounds a little bit confusing right now, don't worry, divergences can be a bit tricky in the beginning, but hopefully the bullish divergence will be much more clearer after we take a look at this example. Alright, so let's take a look at the bullish divergence. Here you can see we have the price on the top here, we have the MACD on the bottom. And in this case, to make the example more clear, we are only looking at the histograms. But as I said earlier, what you learn here can be applied for the MACD line as well. The first thing we want to do when identifying divergences is that we need to identify the highs and lows here of the price. So for example, you can see right here, we have a low, we have a high, low, high, and low. And as you can see, in the first case here, we have one low and then the price prints a lower low, right? But now if you look down to the MACD, you can see that the MACD prints one low and then also a lower low. So in this case, we can see that the MACD and the price goes in the same direction. This right here is what we call a MACD convergence. But what about the next low? Well, if we look from this point down to this point, we can see that once again, the price prints a lower low, right? But if you take a look at the MACD, we can see that the MACD actually clearly prints a higher low. So in this case, we have lower lows on the price, higher lows on the MACD. This right here is a bullish MACD divergence and indicates a reversal to the upside. Another interesting thing I can just point out right here, do you remember what the MACD means? Well, it means moving average, and as you know, the MACD line is calculated by moving averages, but then we also have convergence, and now you know what convergence is. Convergence is this part and this part when the lows of the price and the lows of MACD goes in the same direction, and now you also know what divergence means. So now at this point in the course, you basically knows the full name of the MACD. But alright guys, so now let's switch the attention here and take a look at the bearish divergence. And what is very important when we talk about both the bearish divergence and also the hidden bearish divergence that we will talk about later on is that when we talk about bearish divergence, we are always looking at the highs. So for example, here you can see that the price prints a higher high while the indicator, which in this case is the MACD, prints a lower high. It's important to not confuse the highs here with the lows. But now guys, let's take a look at a real life example of the bearish divergence. And now guys, let's actually make this an exercise. So if you want to, I want you guys to look at this chart and try to identify the bearish MACD divergence. If you need some help, you can of course play back the video and look at the bearish MACD divergence. But now pause the video and try it out. Did you guys manage to find the divergence? Well, let's take a look here together. First of all, let's try to analyze the highs and the lows of the price. We can see that we have a sort of low all the way down here. The price went up, printed a high. This is a bit tricky, but one could argue that we have a low right here. You can see the MACD also printed a tiny low at this point, but then we printed a higher high once again. And if we take a look from this high to this high, we can see that the price prints a higher high, right? But if we look down to the MACD indicator, we can see that we have one high and then a lower high. So we have lower highs on the MACD histogram. When we have the price printing higher highs, while at the same time the MACD is printing lower highs, this is what we call a bearish MACD divergence, and this indicates a reversal to the downside. And if you guys look very closely at the price to the right here, we can actually also see something else, right? One could argue, you can see we have a low right here, and then we have a lower low, right? If we see this as an individual low, you can actually see that the MACD all the way down here prints a higher low. So here we have one type of divergence as well. However, preferably we want the mountains to be more separated, like we for example have right here and right here. And in this other case, you can see that this sort of mountain we have right here is almost like part of a bigger mountain. So that can be one thing to have in mind. This can still be considered as a divergence, but one could argue that when the mountains are clearly separated here, the signals are more clear. So now guys, we are ready to take a look at the hidden bullish divergence. And from my own experience and also of course hearing from other traders, the hidden divergences can often be sort of much more trickier to spot. So make sure to really pay attention now. But first of all, once again, when we talk about bullish divergence, it doesn't matter if it's the regular bullish divergence or the hidden type. When we talk about bullish divergence, we're always looking at the lows. But for the hidden bullish divergence, what we want to see here is now we want the price to print one low and then a higher low, while at the same time we want the MACD to print one low and then a lower low. So as you guys can see, this is pretty much the opposite of the regular bullish divergence. Let's take a look at an example. Alright, so here we once again have a chart, and the very first thing we want to do is that we want to identify the highs and lows. So all the way down here we have a low, the price came up, printed a high, we printed another low right here, high, low, another high, a low, and so on and so on. And since we're looking out for bullish divergence, we want to focus here on the lows. So if we take a look at the first two lows here, from this point to this point, we can see that the price clearly prints a higher low. And if you switch the attention down to the MACD, you can see that we have the MACD printing one low and then also a higher low. So here we have the lows of the MACD and the lows of the price going in the same direction. This is what we call a MACD convergence. But if you take a look at the next low, we can see that from this point to this point, the price clearly prints once again a higher low. But if you go down and focus on the MACD, we can clearly see that the MACD prints a much lower low. This right here is a hidden bullish divergence and indicates a continuation here to the upside. So one key difference between hidden and regular divergence is that the hidden divergence indicates a continuation of the trend. So it indicates that the trend will continue, while remember, the regular divergence indicates a reversal. And you may wonder, why is this even a bullish signal? Shouldn't it be a bearish signal that we see, a strong negative momentum on the MACD? Well, not really. The reason this is a bullish signal is that even though we see such strong bearish momentum, the price is still maintaining higher lows. So this is basically why it's considered a bullish signal. Last but definitely not least, we have to take a look at the hidden bearish divergence. And this divergence type is very important because it can signal that a bearish trend will continue to the downside. And once again, when we look at bearish divergences, remember we are focusing on the highs. But in this case, in order to identify the hidden bearish divergence, we want to see the price printing lower highs. So we want to see lower highs on the price, while at the same time we want the oscillator, which in our case is the MACD, we want the oscillator to print higher highs. So as you guys can see, it's pretty much the mirror image of the regular bearish divergence. So here we have an example of a bearish divergence, and we actually also have another important divergence happening on the chart. So if you guys want to, you can actually try to identify on your own both the hidden bearish divergence, but also take a look at if you can find any other type of divergence here on the charts. So pause the video right now if you want to. But alright, so let's begin here by analyzing the trend. We see in this case we have a pretty clear and nice downtrend. We have a high, clear low. We have another high, we have another low, high, low. And if we take a look from this point to this point, we can clearly see that the price prints a lower high, right? But if you look at the MACD, we can see that the MACD has a high right here, but a higher high right here. So the MACD clearly prints a higher high, while we at the same time see a lower high on the price. So this is a bearish divergence, which indicates, remember, it indicates continuation to the downside. And after this point, you can clearly see that the trend continued here and printed lower lows. But now if we instead focus here at the lows, we can see something very interesting. We have one low, then a lower low, then yet another lower low. But if you switch your attention to the MACD, you can see that we have a low, we have a higher low, and then we have yet another higher low. So in this case, we actually have a triple divergence. And what type of divergence is this? Well, this is a triple regular bullish divergence. And we can see that after this divergence appeared, we actually saw a strong move here towards the upside. And another important tool here you can use, a good idea is to always combine divergences with other tools such as, support and resistance, price action and market structure. And one very important thing you can see about this move is that the price after the divergence actually broke above the resistance of this whole downtrend. Alright guys, so now we are finally ready to take a look at some of the best MACD settings. If you didn't know, the MACD indicator actually have tons of different settings that you can change to potentially improve the indicator and as a result, improve your trading. And the very first setting we're going to take a look at is a setting popularized by Linda Raschke. This setting is also used by other professional traders like Adam Grimes. And very soon we will take a look at exactly how you can change the settings to get this special type of MACD. Next, we are going to take a look at how you can get divergence signals, and specifically I'm talking about MACD line divergence automatically. So you can use this to sit back and relax and let the indicator do its job, or you can use this to confirm your own analysis. Next up, we're going to take a look at the histogram settings. So what are the settings you need if you want to trade the MACD histograms? And last, but definitely not least, we will take a look at something called the 5-35-5 MACD. But let's begin here by Linda Raschke's settings. Alright, so now we are back here in TradingView. I'm currently looking at a British pound US dollar 1 hour chart. But you don't really have to worry about the chart, because the settings we're gonna look at you can use on pretty much all time frames. So you can use it on 5-minute candles, you can use it on 1 hour, or even daily candles. But okay, so the very first thing we want to do here is that we want to navigate up here to the indicators tab in TradingView. And we of course want to open up our MACD. So we simply search for MACD and we go here and open up the standard moving average, convergence, divergence. Now to change the settings of the MACD, we want to go down here to the bottom left corner and we want to press on the settings tab right here. And then you want to make sure that we are on the inputs tab here. And this right here is the standard settings for the MACD. Remember, we have been talking about that the fast moving average is 12, the slow moving average is 26, and down here you can see it says oscillator type, and this basically means that the indicator is using an EMA, or in other words, an exponential moving average for the calculations. And these are the settings we have been using throughout the whole course so far, but we can of course change these settings. And the first setting we're going to look at here, as I said, is Linda Raschke's settings. And what we want to do here is that we actually want to change the fast length all the way down to 3, and at the same time we want to change the slow length all the way down to 10. What this basically means is that the indicator will use, to calculate the MACD line, we will use a fast length of 3 and a slow length of 10. So this is a sort of much shorter moving averages, so we will get faster signals. However, what we also want to do here is, when it comes to the moving average type, we actually want to change this one to a simple moving average. So you want to change the oscillator type to a simple moving average, and you also want to change the signal line. So remember, the signal line is the sort of moving average of the MACD line itself, and this one we also want to change to a simple moving average. And now we are almost done here, but we want to change one more setting, and that is the signal smoothing. So the signal smoothing is just basically the length of the moving average of the signal line. And we want to change this one to 16. So this right here is the exact settings you want. If you want to, you can screenshot this image to go back to later if you decide to use this setting. And what I also like to do here, especially when I'm doing educational videos, is to make the MACD line a bit thicker so you can see it more clearly. Also make the signal line here a bit thicker as well. But so now we have all the settings we need and we are ready to go down here and press OK. So now on the bottom of the chart we have this special type of MACD, but in order to see how this MACD is different, it can be very hard if you only look at this MACD. So let's actually open up another MACD indicator with the standard settings. So we open up a normal MACD. Now the normal MACD is here on the bottom, and to make it a bit more clear we can change the thickness of the lines here. So we change the signal line and the normal MACD line, and we press OK. So here, the first thing you can notice, I hope you can see, is that the MACD indicators clearly look different. They are not exactly the same. They look pretty similar, and that is because the how it's calculated is pretty similar, but we use slightly different parameters here. And one of the main difference between our new settings and the standard settings is that the new settings will react faster to price movements. So to see this, for example, focus on this price movement right here. You can see if we go down to the Linda Raschke settings, you can see that the MACD indicator actually printed a low from this price movement, while if we take a look at the standard settings, you can see that we did not see a low from the standard settings. And that is because the new MACD will react faster to price movements compared to the normal MACD. And you can also see this if you focus on this specific candle right here. You can see if we go down here to our new settings, we can see that at this point, the MACD has clearly already turned green. But if we go down here to the standard settings, you can see that at this point, the MACD indicator is still in the red. So our new settings is able to catch this move earlier compared to the normal MACD. And because of this, we will be able to identify signals faster. So for example, if you focus at the MACD line from this point to this point, you can see that we clearly have a divergence, right? Because the price is printing lower lows while the MACD is printing higher lows. And as you know from earlier in this video, this is a bullish divergence and indicates a reversal to the upside. But if you look down here to the normal MACD, you can see that we still see a divergence, right? But the divergence actually appears later compared to the new settings. So now you may of course wonder, is our new settings always better compared to the normal MACD settings? Well, it actually depends. Because while the new MACD indicator gives faster signals, it can also many times give more false signals. So when you're trading using the new MACD, it's always very important to use other technical variables to support your trade. But as you guys know, when you trade using indicators, it's always important to use other technical variables such as price action and market structure to improve your trades. And especially when you use this new type of MACD that might provide more false signals, it's even more important to use confirmation to take good trades. Another signal you can notice here is that from this point to this point, you can see that the new MACD clearly prints a higher high while we are seeing lower highs on the price. And remember that this is a hidden bearish divergence indicating continuation to the downside. But if you look down here to the normal MACD, you can see that we did not even see this hidden divergence on the normal MACD. Alright guys, so now we're ready to take a look at our automatic MACD divergence settings. And to do this, we actually need to open up a special version of the MACD. So once again, we head up here to the indicators tab, and now you want to search for MACD divergence like this. And as you guys can see here in TradingView, we have tons of different MACD divergence indicators. I have been trying multiple out here, and and we have some good ones. In my opinion, the most beginner friendly is this one called MACD Divergences by David Tech here. You can definitely also feel free to try this one by Tories. As you guys can see, this is the most popular one, but I think the one by David Tech here is the most sort of beginner friendly one. So let's open this one up. And now you can see here on the bottom, we have the MACD indicator. And what you also can see is that this indicator automatically finds both bullish and bearish divergence on the chart. But the first thing we have to notice here is that these type of divergences are not histogram divergences. We have been talking mostly about histogram divergence in this video, but what you can see here is that all of these divergences is on the MACD line. So it's calculated from the MACD line rather than from the histogram. So here for the first bearish divergence, you can see that the price prints one high and then a higher high, while the sort of MACD line prints one high and then a slightly lower high. That is a bearish divergence that indicates a reversal to the downside. We can also see we have yet another bearish divergence here because the price prints higher highs, the MACD prints lower highs, so that is yet another divergence. And we also have a sort of small bullish divergence here because we have one low and then a slightly lower low here on the price, while the MACD prints a slightly higher low, so that is a bullish divergence indicating a reversal to the upside. So this indicator can definitely be a good tool to use to identify divergences. However, there are a few important sort of complications with this indicator. And to see this, let's open up the settings tab for this indicator. The first thing I noticed is that these signals, these divergence signals, appears pretty late here. So it takes up to 5 candlesticks before the divergences confirms, and that can, for some people, that is a bad thing. You will often hear people in YouTube comments talking about, you know, is this a lagging indicator or not? And to be honest, all indicators are lagging in some sense because all indicators use price data to make its calculations. So the calculations will always be sort of slightly delayed compared to reading pure price action. But what you can see here on the settings tab, if you go down here to the bottom, we have a min look back range, and changing this range here should make the signals appear more clearly. This you cannot see on the chart, but when you trade in live markets, you will be able to see that. So we can change this one all the way down to 1 if you want as fast signals as possible. But also here, if you look at the pivot look back right and pivot look back left, unfortunately on the description page for this indicator, it's not super clear what it is, but I'm pretty sure this is the order of the pivot points that the MACD uses to base its calculations. So for example, if we decrease this pivot look back right, let's decrease it all the way down to 1, and the pivot look back all the way down to 1 here, we should be able to see more signals. So as you can see here on the chart now, we have many sort of super tiny divergences. You can see we have a super tiny divergence there, super tiny divergence there. So we can get much more signals by changing that length. But I think that that is a bad idea, because you will see, let me delete this, because when you change this all the way down to 1, you will see so many false signals. So let's actually change this one back to 5 and 5. So my thoughts about this indicator is that yes, it can be a good tool to use to find divergences automatically, but I personally definitely think that it is superior to be able to identify your divergences on your own. That way you can avoid many false signals and also focus on the significant signals. So now we are ready to take a look at the MACD histogram settings. And to do this, we once again, now we want to go up to the indicators tab, and we want to open up the standard MACD. So we want to open the moving average, convergence, divergence. And to change the settings here, we go down to the settings tab for the MACD. And here, in order to get only the histograms on your MACD, you want to go here to the Styles tab, and you want to simply uncheck the MACD, and you want to simply uncheck the signal line. So right now, we only have the histograms here on the chart. But if you think that histograms are a bit more confusing compared to a line, one sort of tip or trick you can actually do here is that you can change all of these colors to black. So you change all of the colors to black here, and you can actually change so that the histograms becomes a line. So if you press the line right here, you can now see, and then we press OK, you can now see that we have a line that represents the MACD histograms. And this is a pretty, I think that this is a pretty clean way to use the MACD. So for example, if you look at this low compared to this low, we can see that the price is printing a lower low, right? While on the MACD, we have one low, and here on the next low, we can see that we have a much higher low. So this is a case where we see lower lows on the price, while we see higher lows on the indicators, right? A bullish divergence indicating a reversal to the upside. Once again, we can look out for more divergences. So for example, right here, we have a high and we have a lower high. Look down to the MACD histogram line. We have a high and we have a higher high. So we have lower highs on the price, higher highs on the MACD. This is, remember, a hidden bearish divergence indicating continuation to the downside. All right, so last but definitely not least, let's take a look at the 535.5 MACD. And once again, we want to go up here to the indicators tab in TradingView, and we want to open up the standard MACD. So we search MACD and we open up the moving average, convergence, divergence. Next, we want to go down here to the settings tab, and you want to make sure that we are on the inputs tab right here. So for the 535.5 MACD, you can probably hear on the name what settings we're going to use here. For the fast length, we want to use 5. For the slow length, we want to use 35, and for the signal smoothing, we want to use 5. So the first thing we can notice here is that the fast length is much faster than usual, and the signal smoothing is also much faster compared to the normal MACD. However, the slow length, so the slow moving average, is actually a bit longer. We can also go to the style here, change the MACD to a bit thicker, the signal line to a bit thicker, and let's press OK here. So you may wonder, how does this affect the MACD indicator? Well, the first thing we can notice is if you guys focus on the histograms right here, you can see that it looks like the histograms goes much more sort of up and down. It hovers around the 0 line much more compared to the normal MACD. And that is because the MACD line in this case, so the blue line, you can see the blue line moves up and down a lot. And that is because the fast length is so fast. It's only based on 5 periods compared to 12 periods for the normal MACD. And because the MACD histograms moves up and down a lot, I recommend that when you use this kind of setting, you should not focus on the histogram, but you should rather focus on the MACD line itself. To do this, we want to head to the settings tab once again. And for this specific type of MACD, I think it's much better to use the line instead of the histogram. So I'm going to simply, uncheck the histograms right here. If you want to, you can actually also uncheck the signal line here. So we only have the MACD line. So now we have a pure MACD line that is more sensitive to recent price movement, so it can react faster and in that way provide faster signals. And since we removed the histogram, we can avoid the sort of false signals that the histogram produce. So once again, this is the same chart as before, and you can see that this type of MACD identified the same type of divergences. We had the bullish divergence right there, and we, for example, had the hidden divergence right here and right here. So now we have been talking about, multiple different MACD settings, and we have been talking about divergences, how to use the MACD, and so on and so on. But in order to build an actual trading strategy, what we want to do is that we want to combine the MACD with other technical variables. So now let's use the same chart here and take a look at a sort of trading example. So how could we have approached this chart right here? Well, the first thing, and what I always like to do, is to look at the market structure. And in this case, we can see that we had a, perfect example of a downtrend. You can see that we printed very clear lower lows, very clear lower highs. And this is, about as perfect as a trend can be. So in this case, we can, for example, use our trend line tool here in TradingView to define this downtrend. You can see we can draw a sort of line like this. If you click on this line and click Control C and then Control V, we can get the exact same slope of the line, and we can define the lower range of this downtrend as well. And here we actually had an interesting opportunity. You can see that before this trend ended, we had one low, pretty much 2 and 3 lows here coming in at the same level. But if we look here at the MACD, and remember now we have the 535.5 MACD, you can see that the MACD printed higher lows. And this is actually also a type of divergence that we haven't talking about in this video. This video would have been, too long if we really covered, everything. But another type of divergence is when we have lows at the same level and higher lows on the indicator. So here we actually had a bullish divergence signal. What you also can see with this move right here is that we had two sort of bullish candlestick patterns. It's hard to see now, but we had a hammer and we had a bullish engulfing pattern. And also, and this is even more importantly, we can actually see that with this move right here, we actually broke the trend channel. The best entry right here could have been this candle right here. You can see this strong momentum candle that really confirmed the break of this trend. So as a trading example, we could have entered a long position at this break right here because we saw divergence, we saw bullish candlestick patterns, and we saw the break of the trend. And here, since we have 3 lows at the same level, we can get a pretty clear stop loss. So we can set the stop loss below the lows right there. As for your target, a very common risk to reward ratio is to target a 2 to 1. And this basically means that the reward you get from the trade is twice as much as what you lose if you lose the trade. So this right here could have been a trade. And, you know, another common target level is a 1.5 risk to reward. Then you would have locked in your profits a bit earlier here, but you would have missed out on some gains. But alright guys, so this course is actually coming to an end very soon. But before we wrap up, I want to say a few things. First of all, I want to thank you all so much for watching. There are tons of different YouTube videos to choose between, so I'm honored that you chose to watch this course. And also guys, if you made it all the way here and you feel like you found any kind of help or value from this course, it would really mean a lot if you can show that by dropping a like on the video. It helps out more than you think. And also guys, of course, if you have any questions regarding this course or any kind of feedback, please don't hesitate to leave a comment down below. I'm trying my very best to answer every single comment. And also guys, if you don't have anything specific to comment, feel free to just say something like made it till the end. Dropping any kind of comment actually helps out a lot with the YouTube algorithm to push this video out to more people. And last but definitely not least, if you guys want to, you know, continue to improve as a trader, I highly recommend that you check out this playlist right here. In this playlist, you can find all the educational trading courses I have made so far, and more videos are coming very soon. So yeah, I hope to see you guys in another video soon, but for now, take care, ciao ciao.